Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with our hosts, Joel Elconin and Dennis Dick. On the show today, the story continues to be earnings. We have so many. I don't know if we won't be able to get to all of them. We'll get to as many of them as we can. In between all the earnings discussions, we have two guests for you today. First up at 8:15 will be David Kula, CEO of Mainstay Capital Management. And then at 8:35, we're joined by the 420 investor himself, Alan Brochstein. He is the founding partner of new Cannabis Ventures. He is a marijuana investing expert. So David, Alan, and earnings is the story of the day. I'm here with Joel. Joel, how was your Q&A with Gene Munster yesterday?
It was fun, man. That guy is just a load of information, threw a lot of tough questions at him, and he just had very succinct answers. Great education. Spent some time with Gene yesterday looking at some new startup companies at a University of Michigan event. So it was a lot of fun. I hope everyone enjoyed it. If you missed it, catch it on YouTube or SoundCloud. I believe we put that up on.
It's on YouTube. It's on Benzinga's Facebook page. That's where I would say to go find it.
All right, let's get to the market here. And S&Ps are in a world of hurt this morning. We are trading down four handles. 66.25, that's your pre-market high. 60.50, that's your pre-market low. I'm going to wait a minute and discuss the S&Ps with Dennis when he comes on here. Crude is trading in the red to 52.28. And this thing has just been in a trading range between 50 and 53 here. Let's go to the daily chart. So crude kind of been quiet here, trying to bump over that 53. That'd be a nice move. Get over there on the upside. Gold and silver continue to leak here. Why own gold or silver when you can own stocks? Gold down $4, 12.74.30. Silver loses the $17 level, down by a dime at 16.87.5. Good morning, Dennis. Did you trade all 130 of the stocks that came out with earnings?
151 stocks reporting this morning. But I just want to say in your intro, you're saying why own gold when you can own stocks? It's why own gold when you can own Bitcoin, Joel. Get with the program.
We are going to, we would talk about doing special segments, and we've talked to a lot of great people about Bitcoin. So that's what's going to be our next one. We're in the process of putting that together. But Dennis, I want to give you a warning sign here in the S&Ps. No wagers, okay? But okay. I just want you to take – I want to have to go – you want me to use the spider because you refuse to pay for S&P quotes?
Yes.
Okay. Let's go to the SPY here, and we got a nice level to keep an eye on. You cannot –
What do you got for me? I'm excited.
Got triple bottom.
Ooh.
Yeah. Let me give you the last three lows in the spider. It was – okay. 55.77. That was your low on Friday. 56.02 and 56.15 in this decimal Latin world. We'll just call 56 even a triple bottom. We have not seen that in quite some time. That is the key to more downside here. I'm not willing to make a wager with you yet, but that is 256 spider. And for you S&P fans out there, the true traders, 25.60 encompasses those three lows. So support is support until it holds, but that is what I'm looking for. Any kind of downside in the S&Ps or the broad market today. So that's my take on that. Dennis, time to get to earnings.
And yeah, we got 151 of them. Obviously, we won't get them all in. So if there's a specific stock you want us to talk, we'll jump into it. But we're going to talk our burrito maker, our burrito restaurant. Spencer, what's their new product?
Queso, they've
long. The quesos maybe weren't doing as good as Ackman had hoped because CMG absolutely getting annihilated last night on the report. It's getting more annihilated. So last night was traded around 293. It's lost another 8 points here this morning. We're down here at 285 now, down 12% here. Oh, this is just an ugly chart here now, especially if you open up below all that support.
Yeah, well, here are the numbers. $1.33 for the EPS. $1.63 was the estimate. Ouch. Sales of 1.12 billion versus 1.14 billion is the estimate. So, bad numbers there. They did say part of the reason for that was hurricane damage. They also see their fiscal year comps.
Stop. They blame the hurricane.
Well, for
Did Chipotle seriously blame the hurricane
for the southeast portion of America? I mean,
but it didn't hit aren't the stores all over North America?
Let me finish. Okay.
How many stores they have in Houston?
I don't know.
Come on, Spencer.
Q3 comps up 1%.
Maybe it's Key West stores. There's a lot of Chipotles, I guess, in Key West.
Q3 comps up 1%. Revenues for the quarter were up just under 9%. They did open 38 new restaurants in the quarter. That was fewer than they had thought, however. I think they expected to open 41. They only opened 38. So there we go.
I think they should have celebrated the fact that I didn't see any major sicknesses the last quarter, Joel.
And I forgot to mention a buyback of $100 million worth of shares.
Well, that's what every company does when they're in trouble. They buy back their stock. This has been a valuation issue for me forever. We know I'm a value guy, and I've said this on the show multiple times. When a stock gets into trouble, when a growth stock gets into trouble and the earnings stop growing, there is a gap. And a gap between where value investors come in and growth investors come in. If the growth investors say, we don't want it anymore, value investors like myself look at the multiple. When it was at 500, it was trading a multiple of 35 to 40. I'm like, no, thank you. If it came into a multiple of 15, 20, that's when I start getting interested. But we are still a long ways away from a multiple of 15 to 20. Can you grab us? Go to the pro while Joel breaks down the technicals here. Go to the pro and grab the earnings estimates for next year.
Oh,
or do you know them,
can we get them? Can we get them for next year?
I'm not sure they're out for.
Yeah.
Or get whatever estimates you got.
I want to show you guys this because we were talking about this on the pre-market show. The crisis started in late 2015, right? The first initial, believe it or not, it's been almost 2 years. Since that time, on the revenue side, they've beat once, and that was a meager 1.81% revenue beat. Every other quarter, they've missed for revenues. I think it was like 10 out of 11. The EPS has been all over the place as well. So when you're looking at something like that and you're buying this stock, I mean, you got to look at the revenue growth or hear the revenue decline as opposed to a stock like NVDA. I mean, this is like the classic example here. Revenues growing, EPS. Look at all that green on there. So I don't know what to tell you. I'm going to go to way out on here. I know I always try and give close markets levels close to the market, and it's just hard to do. But if you're interested in this thing, then I'd look for the 260 handle. Back in January of 2016, you had a 266.02 low. That's $20 away from here, but that's what I see on the monthly support. I'm not even going to dig through the weeklies and the dailies because it doesn't make any difference. This thing's in a world of hurt. What I will say to you, if it gets back to 295, 300 anytime soon, boy, the sellers are going to be lining up. Probably one of them might be Bill Ackman.
I'm just looking here at earnings estimates there. So 830 for this year. The high estimates for last year, somebody must be up there at $12, 1234. Yeah, low estimates are 886. So you could call it like, let's say they make $10 next year. Well, the thing's still trading, was trading over 300. That's still a 30 multiple on a company that isn't growing like it was before. So that's the concern for me. Now, obviously, that we know there's been a lot of reasons why the growth slowed. Maybe it wasn't because, fundamentals. It was because people got sick and people got scared to eat there. That takes time to get back. So maybe that growth will eventually come back, and maybe you'll attract that growth guy again. But right now, the growth investor wants nothing to do with this. The value investor says it's too expensive. And then so you're stuck in limbo here. I mean, at $200, the multiple's only 20, and value investors start to sniff around and get interested. But at $300, the value investors are still saying it's too expensive. So unless you show some growth to attract the growth guy, the stock's in trouble. And here we are, we're breaching major support. We put in the hard bottom right around $300. I was hoping that would hold last night, just for Chipotle's sake, not that I had it. I did trade it once off that 300 last night. I had the first, and when it got there the first time, I bought it for a bounce. I got a quick 6 points. I was in the trade less than a minute, and it bounced up 6 points, and then I sold it. That was just a scalp trade. Then it came back down there again. I could have did it again because then it bounced actually 12 points. Then it came back down the third time. I always say third time's a charm. When it comes back down the third time to a level, especially, even on a day trading basis, it often takes it out. There's that old thing, oh, there's no such thing as a triple bottom. Well, it took out 300 and it was 298, 295, 293 market close last night. Coming this morning, it's 287 here now. I mean, we're breaching the 300 major support level, and that is concerning. Multiple still kicking up there around 30. It's high when your earnings aren't growing.
It's going to be about 25 by the end of the day. So just hold on. No, I mean, the tide has turned in CMG. Long-term investors, I mean, people are still probably sitting on some profits from somewhere. I mean, you've had a really nice run in here, but now, I mean, the monthlies tells you that everything you need to see here till this thing gets back over 300. A lot of downside, 266.02. That was your January 2013 low.
Jump over here. Let's move away from Chipotle. We'll stop picking on Ackman just for a minute here. We can pick on myself a little bit. AMD, I do own this one in my investment portfolio, and I am taking a hit on it here this morning. I thought about selling it ahead of the report. You know why?
Because stocks had run into a report.
Because they always just miss. They always, maybe not miss, but they always disappoint the street. And I'm like, you know what? I'll probably be able to buy this with the 12 handle tomorrow. I should probably sell it. But it was in my investment portfolio. And I'm like, okay, I stopped myself. I'm like, no, don't start trading your investment portfolio. That is, how you end up, not having, long-term investments by trading out of them all the time. So I was like, I stopped myself because we know I put this in there about a month and a half ago in the low 13s. I was up nicely and at a 14.25. I'm now down in the position because it's losing 10%. Spencer, give us the details here on the AMD disappointment.
AMD EPS 10 cents versus 8 cents, so a 2-cent beat there. Sales of 1.64 billion versus 1.51, so beat. On the Q3 goes. As far as Q4, they see sales down for Q4 between 12 to 18% quarter over quarter. So that's the big number there.
Stocks getting hit. Jeffries, I saw a comment that they said to buy on the weakness here. I mean, support is $12. That is where the major support is. August, September. I mean, if you're coming here at 1280, I think you could be early for a trade. I'm sticking with it in my investment portfolio. It's just because I think, AMD, Intel, NVIDIA, I still think long-term, a lot of these companies. Now, valuation issue is still an issue for me a little bit in this one. I like the Intel a little bit better maybe than the AMD from a valuation perspective, but AMD's, it wasn't that bad of a quarter. They're just, this is just one of those examples where they're hitting a lot of these stocks, these higher growth stocks on earnings.
All right, it's a big hit here. 1250, that is your pre-market low. What I like to see is this is going into some daily lows. You can see right there a quad, maybe more lows at the 1250 area. So I think you might find some buyers here. Then the major support that Dennis mentioned at the $12 level. And I don't think it's going to see 12 today, Dennis. And I know you're not going to take the other side of that bet because it's too far away.
It's a long ways away. Yeah, I'm not going to say it, but I would say if it got down there, I'd be interested for a trade because we bounced so many times there. First time down there, if it gets there in the next few days, sometimes there's some analysts chasing price. Maybe tomorrow we could even get some more downgrades here. Was there any analyst action on it today, Spencer?
On AMD,
yeah.
We just had some commentary at Loop Capital, and they lowered their price target $1. So. Okay. Whoop-de-doo.
Some people just chasing price, but no downgrades or anything here yet. Okay.
No.
So I think $12 is where, I'd maybe jumping in for a trade here. I'll stick with the investment in it. I mean, the one thing is, and everybody's giving me heat for having GE this long in my investment portfolio, but like I said, I've had it for 17 years. I mean, to be honest with you, I've taken out dividends more than I have in the stock, because it's paid me 3-4% all those years. But, that being said, it was still a bad investment because the markets went straight up. But you're going to get 104 stocks in your investment portfolio. They're not all going to work out, and it's all about what I will say is if you're going to, hold on to losers, in which I sometimes do in my investment portfolio, you got to hold on to the winners too. Because if you're going to have stocks, and I've had stocks that have taken right to zero, that does happen.
Which ones?
You know what? Goldfish memory on me. I'm trying to remember, but I know I've sold a few. It seems like every other year I'm selling a stock that basically went to zero. I'm trying to remember. Well, it's been a while because we've been in a bull market so long, Joel. I haven't had a lot. You know what? I looked at my investment portfolio. I have like 104 stocks in there. I'm up in like 93 of them. I'm down in like 10. So everybody picks on me for GE, but I mean, this is the bull market, right? If you were in 2007, when I looked at my investment portfolio, or 2008, I was down in most of my stocks. So, and I was really ticked off. I was like, buy and hold, this thing doesn't work at all, because I bought a lot in 2000. I was way up in them all. They all came back down. So it's the market we're in right now. I mean, anybody who's got a long-term portfolio is going to be up in most of their stocks. So it's not
we
that
got
I'm
a guess.
good stock picker, but
That's okay.
my point was just that you got so many people in their investment portfolios and the trading portfolios will hold on to the losers and cut the winners. If you're going to hold the losers, it's okay, I'm telling you, but you've got to hold on to the winners too, because you got to have stocks like MasterCard that I'm up like 1,000% in, because that makes up for a lot of losers.
All right, 8:16. We're going to take a quick break and grab our first guest of the day, David Kula from Mainstay Capital Management here in Michigan. We'll be right back.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel. And we are joined on the phone by David Kudla, CEO of Mainstay Capital Management, right here in the great state of Michigan. David, how you doing today?
I'm doing great. Good morning, guys.
So real quickly, I saw you at the Engage Investment Conference at the University of Michigan, which you put a lot of time and effort supporting. I forgot to add that, who won the stock picking contest? Was there, what school, and do you remember what the stock was?
We had in the finals, we had University of Texas, University of Wisconsin, and University of Florida. And it was a very good pitch by all three of the university teams. And they had pitched a lithium company, which I'm drawing a blank now on the stock, but it was very well done. And a lot of great teams, a lot of great pitches, great competition overall. And University of Florida took the grand prize.
All right. And what did you remember the issue that they were pitching? We'll get it, David. Let's get on to talk about some of these.
It was a lithium mining company. I'm just drawing a blank on it.
Yeah, I remember talking about that with another guest. So you follow a lot of stocks, but particular expertise in the auto industry here, based in Michigan. And a lot of people are happy about the GM stock and the recent run it's had, but not so much as Ford. So let's just talk about GM catching a downgrade today here from Morgan Stanley. Took a long time for the stock to move over $40. Talk about GM and moving forward.
So, when we look at General Motors, we now separated into, our narrative, we separate into what we refer to as a legacy business, which is really the current business where all the money is being made, in legacy business being personal transportation, internal combustion vehicles. And then the future business, which is flexible mobility, ride sharing, autonomous EVs. Okay, when we think about the future business. And what GM has done very well over the past several days and weeks is to not only, they've talked about what they're doing in the area of technology, what they have coming in terms of electric vehicles, the partnerships and purchases they've done relative to ride sharing and autonomous vehicles, and the technologies associated with getting into each of those spaces. And they, as a car company, can easily forward integrate into ride sharing things in those areas. But in the legacy business, they've also done well a couple of things. Low fuel prices are helping all the automakers who make a lot of SUVs and trucks, like GM and Ford. From a product mix standpoint, those are the higher margin vehicles. And what GM has been doing well this year is scaling back fleet sales, focusing on their personal and commercial sales, but the higher margin sales. So we saw production decline, overall sales decline in the third quarter, but earnings was quite strong.
Sustainable trend.
I think it's sustainable. I think that the leadership that they have in place right now is really, pardon the pun, firing on all cylinders. They are doing a good job of articulating a strategy versus, what we're still interested in hearing. What is Ford's mass market electric vehicle going to be? What are other companies doing in the area in terms of partnerships, purchasing technology, developing technology for autonomous vehicles, partnerships in ride sharing? Mary Barr and the rest of the leadership has articulated that very well for General Motors. So we can see how well they're doing at running the company now and generating strong earnings right now. And even though we're beyond peak auto, right? We had a strong September sales month because of the hurricanes, but peak auto of 17.5 million vehicles last year, 2016. That's not just the peak auto for this cycle. That's the peak auto forever for the United States, because we're seeing a structural change in transportation as ride sharing comes online more and more. We know that the average vehicle in the U.S. sits in a parking lot, driveway, or garage 96% of the time. Ride sharing will make our transportation far more efficient. It already is, and it will continue to do that in a big way. So we know that the peak auto that we saw were on the downside of that, and there's a structural change going forward. We'll never see 17.5 million vehicles sold in the U.S. again. And this year we're on track for about 16.5, and we're on a beyond the peak cyclical downturn, and we believe a long-term structural downturn in total vehicle sales. But GM is maximizing profits right now on the other side of peak auto, and they are articulating very well their strategy in these future segments and future technologies and partnerships that they need to be successful in what transportation is moving to in the U.S. and around the world.
All right, let's go to the other side of the coin here. Ford Motor with their new CEO, Jim Hackett. I guess in your opinion, his strategy remains unclear. What does Ford need to do to get back going in the right direction?
They need to articulate that strategy that GM has done so well. And we might get some of that tomorrow in their earnings release. We might get in that press conference, we might hear more about what Ford is going to do. There's already been, some management shakeup, and, there's been a focus. He came in with a focus of looking at what are they going to do going forward in terms of autonomous vehicles, in terms of, future technologies and flexible mobility. We need to hear the details and the action, that we've seen out of GM in electric vehicles. And look, I think there's a widespread belief out there among many that electric vehicles are going to be the only thing you're going to see on the road in 10 years or maybe 5 years, and that's just not the case. IC engines are here for a long time to stay. Just saw a report that Mazda has had a breakthrough in developing a technology to make IC engines 30% more efficient, which also makes them greener. So IC engines are going to be here for a long time. But if you're a major automaker these days, you've got to be articulating a strategy of what you're going to do in the electrical vehicle market, because batteries are coming down in cost, which is the big cost driver. And electric vehicles at some point will be more economical than internal combustion engines. And we know what the future is. We know where things are headed. And, GM is already there with the Bolt. They're there with a car that's readily available, that they're already doing some testing in Manhattan and other major cities for rideshare, autonomous driving. It is, again, they're articulating that strategy, and we're seeing it in action, right? We're seeing things happen with Ford. We're still waiting to even hear what they're going to do.
Moving on here to the, I guess they're not really a Detroit motor company anymore, Fiat Chrysler. They caught a bid off rumors of a Chinese purchase or selling a Jeep, and it never really materialized, but the upward movement didn't stop. What's Fiat Chrysler doing along with GM that has a stock price appreciating nicely?
Yeah, it's interesting, when you look at the CEO of Fiat Chrysler, he even questions the whole autonomous technology, and he's questioning the future. So a very different perspective there versus Hackett at Ford and Barr at GM, where they seem to be embracing it and want to move forward. The rumor came and went with China. I guess we'll have to see on that one.
You're not bullish old stocks, though, and I guess it's not an auto sector stock. It's a technology stock, but we had a nice chat about Tesla Motors here, and it's one of the stocks that you like to short here, and you've done it on a few occasions. My first occasion, do you go out and short the stock outright? Do you like to do with options? When you get a bearish feeling in Tesla, how do you like to play it?
I've shorted it twice, just shorting it outright. Made money both times. Certainly, if you've been a holder of Tesla over the long term, you've made a lot of money. What I'm looking for is those opportunities, and looking now at, the opportunity with the Model 3 production and the way that they're struggling is maybe another short opportunity somewhere through here. Could have done it in September and covered now, but I don't, and I always, when we get on this subject, I think that Elon Musk is a visionary. He's accomplished great things in 3 different industries. What his goals are for what he wants to do in terms of societal change are admirable. And you said it. You said it's really a technology company, and I would say that many people look at Tesla as a technology company, and it is in terms of the technology development it does. But what they're doing now is moving to a real manufacturer of vehicles. That's what they're trying to do with the Model 3. And what we're seeing is, and we predicted this, they're not doing it very well. They were supposed to make 1,500 Model 3s in the second quarter. They made 260. Maybe not such a big deal, but they're supposed to be making, latest we've heard still claims that they will build 5,000 a week by the end of this year, 10,000 a week by the end of next year. And to get to that, get to the goal soon of, building 500,000 cars per year. They've never built more than 100,000 per year. They'll build a little more than 100,000 this year in total vehicles. But, they're at a NUMMI plant in Fremont, California, New United Motor Manufacturing Incorporated, a joint venture between General Motors and Toyota. At its peak, they were building 74 cars per employee. Tesla right now is somewhere around 12 to 15 cars per employee. Parts of the car recently were still being built by hand. They're really struggling to move to real mass production of a vehicle. And, we're waiting to see if they're going to make it. And so far, the reports and what we've seen, they're not getting there. So I think there's a real struggle. Can they work through that? Obviously, yes, they can work through that and get there.
We've been on the line with David Kudla. He's the CEO of Mainstay Capital Management, joining us here on Benzinga's Pre-Market Prep. David, thanks a lot. We'll talk to you again soon.
Thank you.
S&P futures climbing back, only down 2.5 points here, 2464.75, within a couple points of that pre-market high. Dennis, let's get a few more earnings reports in here, and we had a request for AT&T. Spencer, you got the report?
AT&T Q3 adjusted EPS 74 cents and missed by a penny. Sales of, excuse me, 39.7 billion versus 40.12 billion. So they missed on both the EPS and the sales. They also reaffirmed their outlook for the fiscal year, and that's that.
I just got to say, if you're playing this off the dividend, it went ex-dividend on October the 6th.
Oh, I know.
It was the most perfect chart ever for the dividend play. And we know they typically run up ahead of the dividend and sell off after. I never envisioned, I actually shorted it the day after, and I never, ever envisioned that it would fall, 4 points in 5 days. AT&T typically trades like a bond, moves 30, 40 cents a day, not straight down. But, we had some news in there. And also, obviously, now we've had earnings driving it down even farther. Dividends now 5.76%. Everybody's saying, is that safe? I think the AT&T dividend is safe more than the GE dividend is safe. I don't know if it is or not. I don't know what to say. This is an ugly chart here. It's breaking down here again. You're breaking down through major support, but that dividend is attractive.
1.5 million shares have traded. We got a low last price at 34.02. It's just buyers are going to step. Are they going to step up at the $34 level? You had that situation in GE the other day where you dipped under a major whole number, way under 22, and then opened 22.14, went straight up. Here you got a 33.91 low in the pre-market session. Need to gather support there. If not, you will be looking at your January of 2016 low at 33.41. And also, this is another stock you don't have to rush out and buy it on the open today. It will be one of those occasions where we'll put in 2 or 3 or 4 or 5 bottoms in a row finally when the institutions step up. But not a good looking chart here in AT&T.
So many major companies that reported here. Let's go. Let's just do 2 or 3 of them really quick. Boeing, BA. We're going to do them like all under a minute. BA. Number is Spencer?
$2.72 versus $2.66. Sales of 24.3 billion versus 23.9. They're also raising their outlook for the fiscal year. They're raising their EPS by about 10 cents.
Classic scenario. Stocks run up straight up in the report. Had to absolutely blow it away for it to go higher. Did not do that. That's why we're trading down.
All right, popped up 267.75 at your pre-market high, down to 261. So you do have a nice range in Boeing here. Let me see if I can find a daily level for you to lean on.
Quick, Joel, quick.
259.44. That's your 3-day low.
Walgreens, WBA, Spencer, details.
Walgreens Q3 adjusted EPS of $1.31 versus $1.21. Sales of $30.15 billion versus $29.93. So a beat on the EPS, a beat on the sales. Their fiscal year adjusted EPS coming in higher as well.
And this is the exact opposite scenario. Stock's been getting hit. We know Amazon, they've been worrying about that coming in and eating their lunch, which is something I was talking when the stock was at 80. It's now here at 67. Reports an okay quarter. It's good enough because it was selling off into the report. We know these things seem to go the other way sometimes, or a lot of the times in this earnings season. Stock up 4.5%. I'm going to say, though, overhead supply.
Yeah, 70.88. That's your pre-market high. They haven't backed off much of it. Let me see if I can find something on the dailies. And on the dailies, 70.99. That was your October 10th high. See if you can plow through 71.
All right, 8:35. Let's go grab our next guest, Alan Brochstein, the 420 investor, founding partner of New Cannabis Ventures. We'll be right back with Alan. And welcome back, everyone. We're joined now by Alan Brochstein. He is the author of The 420 Investor, and he's the founding partner of New Cannabis Ventures. He's our go-to marijuana stock expert. Alan, how's it going today?
It's going great, even though we lost. The Astros lost last night. It was a good game, and our city could use it, but it's all right. There's 6 more to go.
Let's not talk about that. I'm a Yankee fan, so let's just pretend you didn't say that. We're just pretending you didn't say that there. All right, Alan, it's been a while since we had you on the show. I want to say it was probably around April 20th last time we spoke. So what's been new in marijuana stock land since then?
You know, it's been a very interesting year so far. I've been quite pleased with the development of the overall market. We've been talking about some of these themes over the last couple of years as we've been chatting, but a lot of progress in Canada, and that market heated up again. Probably as heated. Last time I was on, it was kind of peaking, bottomed out in the summer, and a lot of strength in the last month or so, not the last week. So that's been good, and we've been seeing some things in the U.S. market that I think are encouraging on the fundamental side, but for price action's been pretty negative this year. Overall market's down about 20% so far.
What fundamentals are you encouraged by in the U.S.?
Well, so, I just heard you guys talking about earnings calls and all that. And we don't really, earnings, what are those? But, if you go back a few years, the cannabis industry was, the publicly traded sector was a total joke. And now we have companies that are generating literally tens of millions of dollars of annual revenue. And while that may not sound like a lot, when you're talking about GE or something like that, it's actually something that real investors pay attention to. So at New Cannabis Ventures, we created a page. If you go up to the top and you hit rankings, we now have, I think, 13 or 14 companies that are on track to do US $10 million a year more sales. And we're keeping track of those. People can see, who's actually producing revenue. And yes, a lot of those are in Canada. But there's also several in the United States, and some of them are ancillary, meaning they provide goods or services to the industry, but they don't actually touch the plant. And some of them are actually direct cannabis companies. And so, I don't know, it's really easy to make fun of the cannabis sector, but there's some real fundamental development going on right now.
Let's talk Canada just for a few minutes, because some of these companies I've noticed in Canada are actually making not only revenues right now, but some of them are making profits. For instance, and one that I've always talked about with you is Afria. I noticed that they actually made some earnings the last quarter as well. What are your thoughts here first on, profitability eventually coming to some of these companies and already to some of them? And then, where do you see it kind of going from here in Canada?
Yeah. So I can see why you would say that they're profitable, because they say they're profitable. But the reality is, and I love those guys at Afria, by the way. So I don't want to knock them too bad, but if you look at those numbers, part of their profit is because while they grow a lot of cannabis, what they really grow are returns on their investment portfolio. And so that was really the big driver there. But I think you have to understand, I don't want to get too far into the weeds on this, but there's an accounting thing where when their plants grow, they book that as a negative cost of goods in their accounting statement. So for Afria and some of the others that are quote unquote profitable, these biological assets, they're called, or what's driving that growth. But leaving that aside, I don't think profitability is really the key thing right at this moment. You're talking about a new global industry forming, and that's the key thing about Canada. These companies aren't just Canada focused. They're everything but US for the most part, especially in Germany and Europe. So with that said, the revenue growth in Canada is great. We've got, there's now 6 companies that are on track for well more than 12 million a year Canadian revenue, so 10 million US, and 5 of those 6 trade on the TSX.
Hey, Alan, what was the symbol on that stock?
Which one, Afria?
I got it. We got it.
APHQF in the US, or APH in Canada. And that trades on the TSX. That's one of the 5 of the big 6. And by the way, that's since I was on in April, it's gotten a lot more challenging for people, to kind of like stumble into the Canadian market and figure out what's going on, because we started the year with like 8 or 9, maybe 10 LPs. If your listeners aren't familiar, an LP licensed producer approved by Health Canada, there's 67. I'm sorry, those were publicly traded, 8 or 9. And there's 67 now total licenses. They've been giving these things out like Halloween candy. And there are 23 publicly traded companies now. So it's gotten a little confusing.
What?
And I think that's been kind of a challenge for that sector.
Alan, this has been my argument, and I don't follow the industry, hardly at all. But it's been my argument because I get a lot of people, ask me about that after, just because it's kind of local to where I was
Yep.
born. I just that's always my concern is the potential for competition here. So you can say, oh, well, there's only 30 licenses. Now you're telling me there's 67. This is growing. They're giving away like Halloween candy. Is that that can't be good though if you're like one of these producers and they're giving licenses to everybody else?
I think that's a little bit of a concern. Obviously, the couple of dynamics to understand. First of all, these companies that have already ramped up sales, at least in the medical market, they have really good market share, and it's going to be very challenging to these newcomers to take that. But the more important point is the Canadian market right now is kind of in preseason in some ways. It's just the medical market and very limited in terms of how these companies are able to sell their goods. Specifically, they have to ship them through the mail. They can't, there's no stores or anything like that. And it's limited to people who go to the doctor and get the authorization. July 1st, the whole country opens up. And I would argue anybody looking at the space also needs to look beyond just the country, because there's an export market developing as well, plus the ability to do JVs in other locations. So, yeah, I think that's a valid concern, probably less for on the fundamentals of the companies and more of a challenge. Just there's so many stocks, and how do people figure out which is the right one to buy and things like that.
You said the big six just before we leave Canada.
Sure, go ahead.
What are those big six in your opinion?
Yeah, so not an opinion because it's based on numbers, but the 6 largest publicly traded LPs, and there might be a 7th one that could be thrown in the group, but the 6 publicly traded ones are Canopy Growth, that's TWMJF in the United States, or WEED on the TSX, Med Relief, which is recent IPO, LEAF, closed at all-time high yesterday on the Toronto Stock Exchange, and MEDFF in the US on the OTC, Afria, which we mentioned, Aurora Cannabis, which is ACB on the TSX or ACBFF. The most recent stock is CanTrust. Love that name, by the way. And the symbol's TRST, and that's on the CSE because they have a small amount of US business. And then not a real ticker, but CNTTF in the United States. And then the last one's Canamed, which is CMED, CMED on the TSX, and not a real ticker, but CMMDF in the United States on OTC.
All right, lot of symbols in those, or a lot of letters in those tickers there. So we'll have to listen back. Real quickly, GWPH, that's one that we talk about a lot. Nice run up from 98 and change, or 97 and change, up to 116, pulling back. Any long-term outlook on GWPH?
Yeah, so look, long-term, I don't think things have changed. I caught a lot of flack in late December when I was on your show, and I said that the second half of this year would be good for GW, probably not the first part. And so I was a little wrong. It went up with the biotech market at the beginning of the year, but it's performed really poorly since February. And the net result is that as of last night, the biotech index I look at is XBI, and it's up 41%, and GW is down 7%. And it's pretty simple what's happened. There's just been a delay in the filing of their new drug application. So I've been pretty bearish actually on GW all year. I expected it to do better in the second half, but when they started to delay, I had to push back my thinking. And when the stock really started to break down, I just kind of woke up. You got to be careful. A lot of institutions in this stock. The long-term outlook could be fantastic, but between here and there, I think there's going to be a lot of nerves. That's the call I'm making, that people, right or wrong, are going to be concerned about the FDA approving this first plant-derived cannabis drug. I mean, I think they should, and it will be approved, but I think there's going to be some concern over that, some concern over, well, if they do approve it, Will insurance cover it? All these types of questions. And it's a binary event. So there's been delay after delay after delay. I think I said that right, 3 delays. And they're supposed to get the final piece of the NDA filed, I guess, by Tuesday. And so right now there may be some concern that there could be another delay. I don't think there will be. But more importantly, I think it's going to be a sell the news type of reaction when they actually file that NDA.
How'd you weather the storm there, Alan, down in Houston, Texas?
Water right up to the front door, devastation, 4 houses down, all the way around me. It's pretty bad, but we were lucky.
Wow. Good to hear that. Alan Brochstein authored the 420 investment letter and founding partner of New Cannabis Ventures. Thanks for joining us, Alan. We'll talk to you again soon.
Great to chat. Thank you.
All right,
Thanks,
Dennis,
Alan.
let's start ripping through the rest of these 151 earnings reports.
Oh, there's a lot. Let's go to Visa. We haven't talked it yet, and it's interesting because this stuff at a big technical level. That 110 looks to me like it could be, the Rock of Gibraltar up there that needs to get through there. Obviously, that's the level needs to breach. Spencer, details on the Visa report, symbol V.
Visa's Q4 EPS 90 cents is a 5-cent beat. Sales of 4.86 versus 4.63 billion dollars, and their fiscal year guidance was reaffirmed as well. Fiscal year 18.
What do you think? I mean, this Visa and MasterCard. If you go to the monthlies, this is the most one-way trade in these things in the last 7 years that I think you'll ever see. I mean, Visa was $16 in 2011. It was $29 in 2012. It was $40 in 2013. $50 in 2014, $60 in 2015, $75 in 2016, and now at the end of 2017, 108. It kind of really tore off here in the last year in this 2017. But man, you look at the MasterCard, and it's the same story. These two stocks have been straight up for a decade.
So hold on to them, right? Don't.
That's why I'm trying to stick with the MasterCard. I've never had the Visa, but wish I had them both.
All right, Visa, your pre-market high 110.63. You backed a buck off there. Former all-time high. That was back on October 13th, 109.26. So that's your level. It will act as minor. We're pretty close to it, so it's minor support. Yesterday's close, if you're shorting this thing, you want to look at the close at 108.41. Pre-market high 110.63. Of course, 110 a psych number. You had a little problems at 110 after hitting 110.63, but nice run here in Visa.
Jump over here too, and like I said, we've got a ton of them. So wherever you want to go, I'm just randomly going to the ones that I had on my list. And next one, International Paper, IP. A lot of people still follow that company. It's traded about 3,500 shares and it's trading up 40 cents. Spencer, give us the details on IP.
$1.08 versus $1.05, so a 3-cent beat. Sales of 5.91 billion versus 5.89, so a slight beat there as well. Beats on top, beats on bottom.
$60. That's the level I'm going with. I can't see that level in the book if there's anything there, but I gotta think that big psychological $60 level maybe comes into play.
For me, it's all about 59. Are we trading? Let's see where we're trading in the pre-market. I think there was just an odd lot that went up here, maybe at 59.10. But to me, I like it. I mean, you see how you've got up to 59 on a few different occasions. Last one being yesterday. You hit 59 back on July 13th. You kissed it again back in January. So clearing 59, that's a big level. Whole number at 60. Longer term chart. Let's go weekly. Whew, it's been a long time. Let's go monthly. And wow, that's a long time. $60 was your high back in 1999.
One from last night, iRobot, IRBT, has been a wild one. It popped and then it dropped. And now it's popping again here in the pre-market. It's up 10% here. Spencer, details for what's a vacuum cleaner called?
The Roomba.
The Roomba.
Yeah, makers of the Roomba. Q3 GAAP EPS for iRobot, 76 cents. Adjusted EPS was 52 cents. Versus a 47-cent estimate, so they beat the estimate by 5 cents. Their sales of $205 million, and they beat that estimate by about $1 million. They're also raising their outlook for the fiscal year for EPS and sales. And Joel, this is one of the ones.
Yeah, Dennis, were you listening? Were you listening to the special segment yesterday?
No, I missed it.
Yeah,
he made some Cole's notes.
He started coverage on iRobot.
Gene Munster is a fan.
Yep.
Gene Munster's a fan of iRobot.
Yeah.
What did he say?
Just taking advantage of the home robotics. It's a little bit out of his wheelhouse. I think it's only a $2 billion company, but what did he say? He thinks they're going to come out. You're going to like this, Dennis, a robotic lawnmower is what he thinks.
Well, there's already that's already in existence. I've seen that.
Really?
He thinks, yeah, I've seen that already. The blades on it. I've seen that go by in my timeline. So somebody's come out with something like that.
He likes. It's
a great idea. I just worry. You know what my worry is. And there is actually, if you just Google it right now, they are out there, these robotic lawnmowers. But the concern for me is, you just leave this thing running and it's got blades on it. I mean, it's one thing to have a thing running around your home, sucking up the dirt. It's another thing to have blades running in your lawn. That sounds, a little Animal Cross is too close or anything like that, or worse. It's kind of scary to just think of, blades running autonomously.
All right. Pre-market high $83 as this stock had come off its plus $100 high. Now trying to recover. Bases the daily charts. You haven't been up in this area. Ooh, 83.21, your September 20th high. So they're coinciding with your pre-market high. Resistance from 83 to 83.21.
Here, I just posted a link. This is from Digital Trends, the 5 best robotic lawnmowers. So they exist. The Honda Mimo 3000 is $2,800. So these are already in existence. So I guess, maybe they're going to come out with something
better
different.
It's actually called the Mimo 3000. That's hilarious.
Why is that hilarious?
The fact that they have to have like the number 3000 after it. It's like, how do we signal that this is cool? How do we signal that this is cool? I know. Let's put the number 3000 at the end. Then people will know that this is new and cool.
Well, here's the third one is this is from Amazon, or no, actually you can just buy it on it. You can buy everything on Amazon, so you can buy these on Amazon too. Husqvarna Automower 450X. It's $3,500. These things look awesome though. Like they're little the machines on your lawn. They look really cool. I don't know what the risk is with these things, but obviously, iRobot wants to get in these things too, which would make sense. I mean, they got the vacuum, so I don't know. The valuation issue for me here too. I've looked at this one before, and I kind of like it on the pullback here. I'm going to analyze this a little bit further. If Gene's on board, it makes me interested too, because I tell you that Gene Munster, he knows what he's doing.
All right, 854. S&P's down 463.25. Let's rip through a few more reports.
Yeah, we can jump over here to a couple of the rails if you want. Let's go over here to Norfolk Southern NSC. It hasn't traded here yet, I believe. Did we get the report, Norfolk?
Yes, we did. $1.75 versus $1.64, and sales of $2.67 billion versus $2.64 billion.
It's funny how some of these smaller ones don't even have a trade after the report. So, we got to analyze it. And, from yesterday's trading, tell you it's fairly wide, 129.80 to 133.46. So just kind of hanging out. But yeah, it's an example of a stock that's run up into the report. If we look even from a year ago, the stock was about $90, now 132. In the last quarter, it's kind of ran up. So I'd just be cautious chasing this on a beat.
We popped up to 134.41 on Tuesday, so that's your high. 134.52, your all-time high. Touched that yesterday, so you got a double top here. See if we can clear that and get to your half and whole numbers. It's got to be an all-time high here as well. So keep an eye on that double top.
Let's go to Northrop Grumman, NOC. We got Lockheed Martin's numbers yesterday, and they actually got hit. While NOC is going in the opposite direction here today. It's over $300 here right now, which is a big psychological level. Give us the numbers, NOC.
Yep, this is a good one. $3.68 versus $2.92 is the EPS. Sales of 6.53 versus 6.33 billion. So they beat on both earnings. They're also raising their guidance. They're raising their EPS guidance. They raised it by a pretty good chunk. It was $12.10 to $12.40. Now it's $12.90 to $13.10. They see sales going up about $500 million as well. So they really, really raised that EPS guidance.
I mean, this stock has been a monster too. Look at it from the last 5 years, Joe. 5 years ago, 2013, $64. It's now $300. This goes to show you, some of these stocks in this recent bull market, even though it's been kind of a quiet, steady climb, been a quiet, steady climb for this, but persistent. And now you're over $300, just quietly up 400% in 5 years. Incredible move.
Maybe wait till it comes back down to that former all-time high, just under 300 at 299.33. Just gapping way above yesterday's range. So psychological to see if it can hold 300. After that, the old all-time high, 299.33.
Juniper is getting hit here this morning. JNPR is down 7% on their report from last night. This got hit a couple weeks ago as well. I can't remember what the catalyst was, but I thought it was lowered guidance a couple weeks ago, and now they come out with the disappointing earnings, and they hit it again. So, I always find it kind of funny when a company comes out and warns, they hit the stock, then they actually report and they miss and they hit the stock again. It's like a double whammy. Like you're almost better not to warn.
They lowered guidance. They lowered Q3 guidance on October 12th, and then the numbers from yesterday are Q3 adjusted EPS 55 cents, which was the estimate, and then sales of 1.25 billion versus 1.26. So a slight miss on the sales number. Their Q4 EPS is coming in lower. Their Q4 sales guidance coming in lower as well.
So that's a guidance going forward as well. So Juniper not turning it around. You talk about all the tech stocks that have done well. Juniper is not one of them. I mean, JNPR, when you really look at it, this was $45 in 2011. It's now $24. So here you are in one of the best bull markets we've had in a long time. And for 6 years, and they're actually down in the stock. So this has been a perennial underperformer.
Pre-market low 24 even, just getting hit twice on the bad news. So you may see some buyers emerge. If 24 doesn't hold, not seeing a lot on the monthly chart. Your October 2016 low 22.41.
One thing just to note is Cisco was trading down on this a little bit, and then somebody comes on CNBC and likes the Cisco chart, and Cisco all of a sudden got a pop last night. So Cisco was trading around 34.40 because it trades a little bit. I mean, Cisco will influence Juniper a lot more than Juniper will influence Cisco. When Juniper is down 7 or 8%, I often think Cisco could fall 1%. And they came in and just started buying. I mean, this CNBC is unbelievable. Like on fast money, these guys mention a stock now, and the stock pops 2-3%. It's unbelievable. I don't, and usually these moves are short-lived, like I said, which is why I fade a lot of these moves. But it just shows you how much retail participation is really pushing stocks around right now. Because, when somebody comes and just likes a chart, I'm like, really? Okay, so because you have an opinion, you like the chart, stock's going to pop 1% now? It just seems ridiculous. But anyways, props to CNBC and Fast Money for being as influential as they are. Cisco is up at 34.74 here right now because I forget who it was, but somebody liked the chart.
Take it out to former high of the move at 34.68. So see if we can hold that 34.70 level in that first 15-minute bracket. Spencer, you want to wrap things up?
Yep. Can we get some imbalances first, Dennis?
Yeah, let's take a quick look. Oh, well, of course, GE. 578,000 to sell. When is the last time? We should rewind all these shows. When is the last time we had a buy imbalance in GE in the morning? This seller who's been selling GE the whole way down is up a lot of money, or is maybe finally going to be liquidated here at some point in time. But holy cow, he's been right. It's 578,000 to sell. That being said, stock's only down 7 cents. So, you look at it here and, a 600,000 share selling balance of G would normally knock it down more, but it's been knocked down so much. Stocks already trade 173,000 shares here this morning, just trade 177,000. It's funny. I just say that. I just said that. And then look, people are listening to our show too, Joel, and they just hit the thing down to 2177. But anyways, from 83, somebody just hit 20,000 shares worth.
2147.
I guess they didn't know that was the imbalance.
Get your bid out there at 2150, Dennis. The pre-market low from Friday.
You like 2150?
Well, the pre-market.
I don't get any bids out there in GE. GE is dead to me. I'm forbidden.
You're selling it, Dennis.
Tips on the show. I might forbid people to talk about GE on the show.
Yeah, Dennis, why don't you sell it out of your portfolio on the pre-market show, and then we'll get you out of it. That you won't have to.
When I'm out of it, that is the bottom. When I sell GE, everybody has to go buy it because that will be the absolute bottom. The dog of my portfolio. Say dogs of the Dow is the dog of Denny's portfolio. General Electric. I've been in it 17 years, and I just looked. I'm down 17%. So I guess I lose 1% every year. Awful.
Are there any other big ones as notable?
Square, 120,000 to buy. The guy's there every day. Baba, 60,000 to buy. The guy's there every day. Guy or girl. AT&T, 198,000 to sell. We know because obviously the stock is down significantly on its earnings report. Pfizer, 93,000 to sell here this morning. General Motors, 50,000 to sell. I think that's it.
Go buy some light bulbs.
Okay.
I don't even know what they do anymore. They did so many other things, and now what's killing them is that Baker Hughes purchase at the top.
Oh man, that was bad. All right.
That was a bad one.
All right, we're keeping Spencer over time here, so
It's okay. I don't mind. All right, that's it for our show today.
Spencer said that was him selling the G. Yeah.
Who said that? Spencer?
Spinner.
Oh, okay.
Spinner said that.
All right. As far as tomorrow's show, we got Mark checking on with us once again. If you missed any part of our show today, though, you can catch the podcast on iTunes, SoundCloud, and Stitcher, or just go to Benzinga's YouTube channel and rewatch the show as it aired, comedy and all. And not that we take out the comedy for the podcast, but yeah. So YouTube, iTunes, SoundCloud, and Stitcher is where you can catch our show every day. And that's it for us. Hope everyone has had a good morning so far. Hope you all have a good rest of your day. We'll be back with you folks on Thursday.